Hello and welcome to yet another episode of London Eye. Today on the show, let's discuss BRICS and where India fits in to that BRICS universe. Because this year there's been a lot of disappointment and disenchantment about how the BRIC economies and the BRIC markets are doing. BRIC funds have lost a lot of their assets under management. Who better to talk about the BRICS story and whether it's losing its sheen than the man who coined the term? Jim O'Neill of Goldman Sachs is my guest on the show today. Jim, thank you very much for joining in first. This year has not been the best of years for the BRICS. So let me start by asking you about that. Why is this disenchantment which has started creeping in about the BRICS markets?
Well, first of all, I think you do have to distinguish between the BRICS markets and the BRIC economies. Markets and economies don't always go exactly hand in hand. Secondly, despite that, of course, the last decade was fantastic for both the BRIC economies and the BRIC markets, with the performance of economic growth and the markets vastly surpassing even what I thought. So they've sort of set themselves a very high hurdle. So in some ways, some kind of slowdown and relative disappointment performance-wise compared to the past decade was sort of always going to happen. Against that background, I think you have to dive within it. Economically, China, even though it has slowed, it's doing better than I had assumed for this decade, whereas the other three are all doing differing degrees of somewhat underperformance. And that is different than the markets because, of course, China as an equity market has disappointed the others, even though economically I would argue it's doing better. And then I think beyond that, you have to really look at each individual country to see quite what's really going on, particularly on the economy, but to some extent on the markets too.
Mm-hmm. But do you think global investors are losing interest in the BRICS as a theme, perhaps because of China's slowdown and how poorly Brazil and Russia have done as well?
Oh, definitely. Goldman Sachs Asset Management, where I've just recently retired, has both a BRIC and a Next 11 equity fund. And in the past 12 months, we've seen a lot more flows into the N11 fund than we have to the BRIC fund. And I think it's representative of broader behaviour by investors. And to be honest with you, I think it shows, not for the first time in my life, that many investors, even cautious passive ones, are very momentum driven. So the fact that the story has lost some of its acceleration, and as you touched on in some cases, particularly I think in Brazil and India, has had some disappointments, people have lost interest.
How would you rank them now if you had to choose your pecking order in the BRICS? What would it be?
Let me just say one other thing before I do that, because even though they've lost the fascination of the markets, economically, what's going on with the BRIC countries is still the biggest thing of this generation. I'm fond of saying to people that China creates another Greece every 12 and a half weeks, another Cyprus every week, another Spain every year. Actually, in the past 2 years, China's created another India. So China on its own is quite remarkable. And 2011, we don't really have full data to compare yet, but for 2011, the BRIC countries created between them another Italy in 1 year. And by 2015, the four of them collectively will be bigger than the US. So we need to keep all of this in perspective.
Your pecking order?
My pecking order. I think economically, I'd have China number one because I think it's adjusting very well. It would be a close toss-up between India and Brazil as number two, and then Russia last, number four. Not the same in markets. In terms of markets, I would have Russia number one because it's very cheap. China number two, Brazil number three, and India number four. Although all four of them, the way I look at things, are actually now quite cheap. And actually, contrary to what we've just said, I think for the true forward-looking investor, over the next 5 years, this is a fantastic time to be investing in the BRIC markets.
So you think the story is not broken? It's just a temporary respite that the BRICS might be going through?
I don't think the story is broken at all. I think what's happened is because the BRIC story became so strong during the last decade, that by the time we hit the global credit crisis in 2008, people were absolutely in love with the BRIC countries, and you could see that with China and India in particular, that were trading at a premium on a forward price earnings ratio to all the developed markets. At one point, both of them were nearly double the US. And people couldn't get enough of the BRIC story. People are opening BRIC funds all over the world. And it tends to be the case. Once you get to that kind of degree of herd mentality, some of the enthusiasm has gone. And subsequently what we've seen in the past few years. Now, because there is some cyclical economic disappointment, people are really giving up hope. But I've been looking at markets for 30 odd years, and one has to always remember valuations, and the valuations of these markets today are the most attractive they've been for many, many years. So not at all, and I think over the next few years investing in the BRIC countries is again a very attractive thing to do.
Not just the BRICS, but emerging markets in general. Since the start of this year, people have been talking about how developed markets will have already started outperforming again, and that will continue to be a trend, which is very different from what we've been hearing for the last couple of years. Do you think that can work out?
Well, I don't think it's actually true. Because China and Brazil are very big components of emerging market indices, their weakness is dominating what's happening to the aggregate. You take those out of it and you look at a lot of other important emerging markets, that they are actually outperforming everywhere except Japan. Goldman Sachs Asset Management has a so-called Next 11 fund, which consists of equity markets in the 10 largest populated countries after the BRIC countries, including places like Indonesia, Turkey, Philippines, and many of these markets are up nearly 20% this year. So people say that emerging markets are underperforming developed markets, but it's not true, and I think it's very dangerous to generalize about these things. Very dangerous.
Since you mentioned Japan, how significant are the ramifications of what's going on in Japan over the last few months for global equity performance?
I think this is a huge, huge story. I've often described Japan as existing in a happy depression for the past 20 years, and that the level of GDP per capita has continued to creep up, although the economy and their markets has been very weak. What we've seen with Abe and Abenomics is that they want to have enough of this. And the aggressive monetary policy stance they're undertaking in particular is really important for driving asset flows and a weaker yen and a lot of money back into the Japanese stock market. But very importantly for many other markets around the world, the infamous Mrs. Watanabe, the Japanese retail investor, wants to buy a lot of high-yielding foreign markets. So their appetite for high-yielding foreign bonds in particular is rising sharply.
So would you say that the implications are largely for liquidity, or is it something else? Because some people, including you, seem to believe that the recent collapse in gold has a little to do with what's going on in Japan.
Well, I think it's certainly important liquidity for bond markets, but I think it might be something a little bit more, because we forget Japan is still the third largest economy in the world, despite what's happened the past 20 years. And so if Japanese policymakers are doing something to really rescue the domestic economy, I find myself, and I was just there recently, I find myself thinking, is this a case for Japanese investors finally starting to invest in real things in Japan? And linking it to gold, if you trace back over the past 11, 12 years, some of the earliest buyers of gold were Japanese investors. And so I suspect suddenly Japanese investors don't have any need for gold when they can buy domestic real estate, domestic equities, things that haven't been rewarding for them for 20 years. So I suspect, perhaps unconventionally, the gold weakness might have something to do with the Japan story, yeah.
Do you see it persisting? Do you see lower levels in gold?
I'm in the camp that gold's probably peaked. I think the past month has demonstrated that gold, even if it ever was a safe haven, clearly isn't, because it's fell 15% in 2 days. And that this notion that it's an easy alternative to invest in against easy money everywhere has been disproven. And I think gold's problem is there's far too many people that have been speculating on it that have no natural reason to be owning gold. So I could easily see another $200, $300, maybe even $400 decline in the price of gold before it settles. I've not seen for many years why it's been truly justified above $1,000 an ounce, and I wouldn't be surprised if we go down quite a bit more.
Would you say the same about crude?
For separate reasons, I've been negative about crude for the past 2 years. I think there's enormous things going on in the supply and demand dynamics of energy, particularly things related to oil. On the supply side, the whole shale gas and shale oil story in the United States is a huge story. And I think in China, because they're focusing on what I'd call quality of growth as opposed to quantity, it means the demand for energy-polluting fuels and conventional fuels is just not going to be as strong from China this decade as it was the last. And I think that combination of changing supply and demand dynamics, it's not good for the price of crude. So I could see crude going down a bit further, maybe to $80 a barrel or something from where we are today.
Are you surprised by how resilient it has been, though? Because some of these dynamics that you spoke about have been in place for a while, but crude's been just sticking around that $100 mark.
I wouldn't say I'm surprised. I think against what I said, of course, we have this never-ending uncertainty in the Middle East and huge fears about escalation of many conflicts in the Middle East, and people worrying about the safety of supplies. So I think there is a good $10 a barrel premium built in for Middle Eastern uncertainty, which just in the past few days is showing signs of escalating again. So I'm not overly surprised. I am a little bit surprised that many people still talk about the medium to long term outlook being bullish, because I think those days are past. I think the whole bull cycle in not all but many commodities has probably peaked.
At this point, a quick break. We are back with London Eye in just a minute with Jim O'Neill.